Hi all, Ben here, East West. Another look at uranium again this week, of course. A bit of something for everyone there. If you're a bull or a bear, there's things to lean into. So I'm going to do some slightly different names this week. I'm going to have a look at CCJ, and then I'm going to look at two different ones. I'm going to look at FCU, and I'm going to look at EU as well. Some smaller names that we haven't looked at before. So we'll cover those, have a look what we can see, and see if we can make sense of it all. Right, so just looking here at Cameco, and this is a weekly chart for CCJ, right? So this week, it's slightly hard to see, but this is a spinning, what we'd call a spinning top candle, okay? So we got a longer shadow on the top, a longer shadow on the bottom, and a small body. So that represents indecision. Okay, now we've seen what's happened today, on being Friday. I'm recording this on my time, Saturday, but we've seen today on Friday, we've had some big rejections away from the highs, and the general market is on the skids a little bit for one reason or another. I'm sure the geopolitical situation is not helping, but it's always a combination of things. But nonetheless, we did come through and break these peaks, so that's got a lot of people cheered. But there's something there's a bit of a sinister connotation with the breaking of this top. So let's go in and have a look. So we're down here on an hourly. Now this, of course, is the line that represented those old peaks. And now I want to have a look at the bar that broke those peaks. So when we move in like this, okay, we'll just expand this out so we can see here the bar. So this is pretty straightforward. Look at the volume and look at what happened. So as we broke the top, the breakout traders came in, right, and bought hard. But what's happened since? We've rejected back down. Okay. Are they trapped? Okay. Have they already exited their positions coming back down here? I mean, the disciplined ones probably did. But has everyone? Are they trapped longs in here? I mean, you can just see it, right? You can see the volume on the breakout, and the market's then failed. It's a warning shot to me. Okay, so when I go back and look at the whole structure, okay, I'm starting to think, all right, let me just turn this volume off. I would be thinking, okay, so we've got an event here that's emotional, probably got a lot of people emotional. We've broken the tops. We've got breakout traders piling in. This has psychology to it. So as soon as I'm thinking, okay, I've got a big run that I think ends with a bit of psychological disturbance, which is basically a failed breakout. Well, what am I thinking? I'm straight away. I'm thinking Elliott wave. Now, I know. A lot of people roll their eyes, but all I'm going to do is put together the case of how I would put this together as a five, because I can see 5 waves here without labeling up. The 5-wave progression that ends in a psychological disturbance above with a failed breakout at the top. So first thing I'm looking for in this run, okay, this run, right? The first, I mean, you could say we got one here, okay, and even if I did that in, right, it's just another measured move, right? This one was a bit deeper. This one sort of broke the retracement, but I think you're probably looking at a 1-2 internal. I won't go into the internals, but what I'm thinking here, right, is that, well, I can see it, right? So we've got, let me just get that on the bottom there. So we've got the swing up, we've got the swing back, and then we've got the extension. Okay, so that straight away I'm thinking, okay, is this 1, 2, 3? So when we're thinking about third wave extensions, the most common point that we think about a third wave extension is 161.8% extension of the first wave. That would be a common target. It happens often, not all the time, but you can see here, where did this swing terminate? Right up here into the high probability zone. So at this point you're going, well, 1, 2, 3, that kind of makes sense, right? And now you're thinking, okay, well, if that's going to be 1, 2, 3, what would I expect for wave 4? Well, in textbook, wave 4s tend to be sideways and choppy. This one was a little bit more directional, but it's definitely choppy price action, right? I mean, this is pretty choppy stuff. But we would expect wave 4 to bottom somewhere in the realms of 23.6% and 38.2%, the length of wave 3. So let's mark that up. And as we do that, where do we bottom? Right on the 38.2% retracement of this swing. Okay, so at this point, with Elliott, you're thinking, okay, well look, I got a pretty good case here. This looks all right. I mean, this looks like 5 waves going in. So there's a couple of ways here you would try to identify potential areas for wave 5 to terminate. Now, one of the common ones is because we've got the extended wave 3, we would tend to think that the first wave and the 5th wave would equate towards equality. Wave 5 was it's slightly longer than wave 1. I mean, this is $52.11, so we got up to $52.66. So it's a little bit longer, but at this point you'd be going, okay, well, this is the thing. At this point we're still in pencil because, this could just do this next week. We don't know. All we go is, okay, well, 1, 2, 3, 4, 5. I mean, I can see that going in there. Can I lean into it? Well, I've got a failed breakout above the old high on big volume, and I think we've got some trap traders in there, and I think I've got 5 waves going in, and basically the peak, right? The peak volume. Okay, this is the peak of the volume. This is the peak volume bar. Okay, there, and we started the progression here. Okay, there hasn't been a higher. That the highest volume was done at the peak. I mean, it just all seems to me, it just smells like trap traders, trap breakout traders, I should say. So what would I expect from here? Well, okay, I'm expecting a 3-wave correction back down. And how far would that go? Well, you don't know how far it's going to go, but what you would expect is a move roughly. This would be an area where you would pay attention between the 50 and the 61.8%, the length of the first move. And after that terminates, what would you expect? Another move higher. That is just how you'd put the progression together. Now, what have we got down here? That is an unfilled daily gap. So what? Gaps don't mean anything. Well, remember the study we did a few months ago. I just reran the code over Cameco, right? Since 2020, the COVID low, there's been 41 bull gaps, okay? So where the market's gapped higher. 80% of those have been, 80.5% of those have been filled. Okay, so 80% of the gaps in the last 4 years have been filled. 19.5% have not. So to me, that just suggests that the odds are more likely than not that this gets filled in at some point. We don't know when, but when you start to put all that evidence together, you start to think, well, okay, does that look like a reasonable thing to happen? Well, it's not unreasonable, I don't think. Now, these are some of the examples of gaps that haven't filled. So we got one back here on the 1st of June, which was these are all the gaps that are 1% or less, which this one is less than 1% gap. So this one has been open 463 days. We've got another one here back start of March last year. It's been open more than a year. We've got one here that's been open 236 days. We've got one back in October that's been open for 165 days. This current one has been open for 12 days. Okay, we had a little tiny gap here which got filled in within 5 days. The point being here is that even though it's pretty ambiguous, well, I don't know if there's a great deal of evidence you can lean into in terms of the timing of gaps being filled. But, I mean, look, the other thing to lean into, like I said, this gap's been open for 12 days. The other thing to lean into is, the one thing I did find is that 50% of gaps do close within 10 days. So, the odds are starting to skew away a little bit that this gap may not get filled. Well, not filled anytime soon. And maybe it never gets filled at all. But like I said, 80% of all the gaps have been filled. Okay, so that's probably the more bearish outlook. And that kind of feeds into what I had been thinking, which is that we're more than likely stuck in a broad trading range. And that's why I think we would keep doing this. But there is something else going on here that a lot of people are pointing out. And maybe you have already seen it for yourself, and that's what you're leaning into. But it is this, of course. The cup and the handle. Okay, I think a lot of people are leaning into this cup and handle pattern. Okay, now I'm not going to go into it too much today in this video because I'm planning to do a bit of a collaboration with the Red Devil in the next day or two, where we're going to discuss cup and handle patterns in a little bit more detail, and he's going to share some of his expertise on this. So yes, this pattern is here. Will it win out? Well, the bulls will certainly think so. It just depends, how much. If, like I said, if the breakout traders are trapped, and we know there's some there, if they haven't dumped, how far does the market squeeze them? Okay, and how far? The question is, even if this is a cup and handle, how far does the market come back before it goes? When does this get disqualified? So they're the sort of things I'll talk about with the Red Devil, hopefully very soon. But that's where I'm just going to leave it with CCJ. So I can see 5 waves up here. I can see breakout traders that are probably trapped. I can see a weak overall market. It's got nothing to do with uranium. There's just obviously some factors out there that are weighing on the market. I'm anticipating some sort of pullback to where we don't know, but we know we've got a gap. We know 80% of gaps get filled in, and even just look where this gap is. You can just see. Grab that. You can see where it just ties into this old peak here. So there's a lot that goes together though, even though that would be a little bit of a deep retracement. So that is it for CCJ. Let's push on. Okay, Fission, FCU, something I haven't really delved into before. Okay, it's the same sort of setup, right? We had the 2023 trend and that broke. Okay, so that's kind of done. So it just becomes about what comes next. Well, just looking at this without doing anything, I mean, straight away, what I'm thinking is I could just grab a retracement. Okay, where do we get to? Right to the 50, where we've got almost a triple bottom there. Well, you could. I mean, look at it. I point this out every week, right? Old resistance becomes support, right at the 50. Okay, it doesn't have to be more difficult than that. So if you're a bull, well then you've got something to lean into here. I mean, I don't think that I would probably be just looking at that as a trend. Now it's a very broad trend and it's yet to be proven because we've only really got 2 pivots, so it's not perfect as yet. But that's definitely a technical setup where you would be looking for the midpoint of the pitchfork in a short-term trading sense. But of course, it's never that straightforward. What have we got coming back the other way? Well, we've got to have a look at this, right? We tickled through the resistance, we tickled through the retracement zone, but we're just sitting within it, okay? And then the broad market is probably going to weigh on this. So if I'm looking at this, what I'm looking at here is a rally, and then I've got one corrective leg, a bounce. I would just be thinking that that's going to go external. That maybe not that low. Maybe it only goes to there. Maybe it only goes to here. But that is just what I would be thinking in terms of this progression, that we've only had one corrective leg and that's not enough to balance out the rally. Now we've got to think about the time factor here too. Okay, just looking back a little bit in history here, right? This COVID low to the high, right, in October 21. That to me is one progressive rally up. Okay, these lines represent the amount of time it took for this to rally, right? So from this point, this is halfway in time, 61.8% in time. Look where we bottomed, almost 1-to-1. Okay, that we spent rallying, we spent correcting before we got the next leg of the rally. So this was 592 days it took to rally, 406 bars. It's 582 days to correct, which is about 400 bars. You don't often get symmetry that good in markets. They're never that. They're very seldom that perfect. But this one is pretty damn good. But can we apply the same thing here? I mean, I don't know if I'd lean into it that's going to repeat. But let's just think about the connotations when we start to think about this latest move and this latest pullback. Okay, this is the time it took to rally. We've only been correcting for a quarter of the time it took to rally. Now, there's no hard and fast rule that says, oh, well, if a rally went for so long, we must correct for X amount of time. But just the factors that I see out there, it would just lead me to think that this is not done, that we're going to get 3 waves coming in here. I don't know if it's going to be hard. I don't even know if it's going to be that. It could be. I'm not saying it won't be. I'm not saying it is, but that would take us into October, where before we broke out of whatever pattern. And remember that it might look like it could very easily, and this is kind of what I've been thinking in the whole space. We could very easily just get into a situation where we do this sort of thing for a while before we go on. Okay, but the point being is it doesn't feel like enough time has gone by and the structure hasn't filled out enough to balance out this rally, just in my opinion. Okay, so that is what I'd be expecting, you know, something more like that. I mean, it could be deeper, I don't know, but you know, the one thing that weighs in our favor here is that we've already established this very good area of support, which sits right on top of the 50% retracement zone. Okay, so we could push a little bit deeper, we could come in here and test this, but I just think a bit more time's got to go by, okay, before this can move on. Okay, let's have a quick look at this EU, Corp Energy. Look, same thing here, right? There's a lot of people that probably see exactly the same thing. They see the cup and the handle. Okay, that just looks very apparent. And I'm not saying that it's not, but my question would be, okay, well, if this is a cup and handle, at what point is it not a cup and handle? How big does the handle have to be? And these are the sort of things I'm going to delve into with the Red Devil. How deep does the handle have to be before we start to think that the odds of this becoming a cup and handle are gone? So let's just put the cup and handle aside. And if I wasn't looking at that, I mean, what do I got? I got this, right? More or less a double top with a big wick rejection, okay, at the top. And that's wicked out and rejected pretty well. It's not quite as stark as CCJ because this break was very, very light, okay? So I don't know if it sucked a lot of people in here, but we certainly had a very big volume, you know, relatively speaking, of course, but we had a big volume candle here that took us to the top. And since then, we've dribbled off. So they might have caught a couple of people up there. I don't know. I don't know how tight we can get in here. Yeah, it looks like they might have got a few. We're on a 4-minute chart here. Yeah, the volume kind of dropped off here. It looks like they did all the heavy lifting through here, but maybe not as prevalent in terms of the breakout, or trapping the breakout traders, I should say. But, you know, there's something here for the bulls, there's something here for the bears. You know, just looking at this, okay, so we got this rejection, but where do we retrace to? You know, it's the first thing I always do is like whenever you got a move that, you know, we got a strong move and a counter move, how far back did that counter move come? And what was the structure of the move? Now, when we do this, look where we came back to. In fact, if I got that exact, we're almost exactly on the 61.8. Okay. But, you know, the same thing applies the other way. So as we come in a strong move this way, how did we come back this way? We came back to the retracement zone the other way. Okay, back to the 50. But we've since fallen away, and now we're back testing into this zone. So what we've got here, okay, is two zones that will form an overall battle zone. Okay, so they're like the end zones of each team, and that's like the playing field. Okay, so this is where the battle's going to be fought in between the two end zones, because we know there's likely to be resistance through here and there's likely to be support through here. So one of these teams is actually, call that the danger zone. It's structure it like this. It's probably more like that, right? And the, you know, the battle is going to be waged between these two zones until eventually one side or the other scores that touchdown and we get a bit of a resolution through this. So, you know, like I said, that you can lean into this any way you like, but right now there's two ways to think about it. There's this move, which has had its good retracement and now is in the process of pushing away. Okay, there's one way you can look at it. The other way is that we've had this move and this has not completed yet, because nothing says we have to have 3 waves down. It just tends to be the way that markets go. They just tend to move in corrective waves of 3. And that is not an Elliott thing, even though it is part of Elliott wave. I wouldn't apply Elliott to this. There's nothing here that's clean enough to make me think this is a good Elliott pattern. But 3-wave corrections in all different forms tend to be the norm. But, like, just putting that aside, just looking at this, I'm not going to think about the cup and handle. I've got a double top. We've got a double top with a wick rejection. We've got a strong move back. We've got a counter push. I would just expect more downside. I could definitely be wrong. But I would probably just be taking this trend now, and I wouldn't want that to fail. Okay, that's a pretty intermediary sort of trend. But if that held and then started breaking that pivot high, well, then you'd have something different. But I am just anticipating that will fail. So we will see. We'll see what happens. But that's it. So thanks for watching. Hopefully you just picked up a couple of bits and pieces there that can help you out with your own decision making. And if you did, great. Don't forget to hit like and subscribe. See you in the next video. Bye for now.